Here's a detailed summary of the SiriusXM 2026 Q1 earnings call transcript. Overall performance and strategy. SiriusXM kicked off 2026 with a strong first quarter, executing on their three strategic priorities: strengthening the subscription business through in-car experiences, accelerating advertising growth, and leveraging their portfolio for efficiency and value. The company saw positive momentum across these areas, driven by solid core business performance and efficient operations. Key financial metrics: Q1 2026, revenue, $2.09 billion, up 1% year-over-year. Subscription revenue, $1.6 billion, up 1% year-over-year. This was supported by pricing discipline and recent adjustments, partially offset by a smaller average subscriber base. Advertising revenue, $407 million, up 3% year-over-year. This growth was fueled by podcasting advertising, up 37%, strong video and social ad performance, and accelerating programmatic demand. Adjusted EBITDA, $666 million, up 6% year-over-year, with margins expanding to 31.9%. This improvement was due to revenue growth and disciplined expense management. Net income, $245 million, up 20% year-over-year. Earnings per diluted share, EPS 72 cents, up 22% year-over-year. Free cash flow, $171 million, more than tripled year-over-year, attributed to higher adjusted EBITDA and lower capital expenditures. Gross profit, $966 million, with a margin of 61%. Subscription business highlights: net subscriber additions, self-pay minus 111,000, a significant year-over-year improvement of 192,000. This was driven by the increasing adoption of companion subscriptions and progress with continuous service initiatives and dealer extended duration plans. Average revenue per user, ARPU $14.99, up 1% year-over-year. This reflects pricing discipline and continued value addition. Churn, 1.5%, which was the lowest first quarter churn in the company's history, demonstrating resilience despite a recent price increase. Subscriber satisfaction achieved the highest scores in history, with year-over-year improvement across all 5 core metrics, indicating growing confidence in the long-term value of their offerings. Advertising business highlights: YouTube partnership. A landmark deal was announced where SiriusXM will be the exclusive U.S. advertising representative for YouTube's audio inventory. This expands their reach to 255 million monthly listeners, representing nearly 90% of the U.S. population. This partnership will offer advertisers scaled access to premium audio across diverse content and a more seamless buying experience. Podcasting. SiriusXM remains the one podcast network in the U.S. by weekly reach. They are a launch partner for Apple's new video podcasting experience, aiming to unlock dynamic video ad insertion and a larger advertising market. Programmatic demand. Revenue in programmatic more than doubled year-over-year, with strong performance through Google TV 360. Management's forecasts and guidance: full year 2026 outlook. Revenue, relatively flat. Adjusted EBITDA, stable. Self-pay net additions, modestly lower year-over-year. Free cash flow, continued growth, targeting approximately $1.35 billion for the full year, with a path to $1.5 billion in 2027. Leverage, on track to achieve their target range of low to mid 3x by the end of the year. Significant risk factors: auto sales environment. A measured auto sales environment could impact trial volumes. Macroeconomic backdrop. Awareness of the broader macroeconomic environment and its potential influence. Spectrum monetization. While explored, the timing and execution of spectrum monetization are complex and subject to regulatory and partnership developments. Capital allocation. balancing investments in the business, balance sheet discipline, and returning capital to shareholders requires careful management. Key statements from management. Jennifer Witt, CEO. We are off to a strong start in 2026, executing with focus and discipline against our 3 strategic priorities. On the subscriber side, we delivered significant year-over-year improvement in net additions, grew ARPU, and achieved the lowest first quarter churn and highest subscriber satisfaction scores in our history. Our partnership with YouTube will significantly enhance our advertising capacity, and we continue to expand margins through our enhanced focus on efficiency. The durability of our subscription model and the consistency of our cash generation continue to provide a strong foundation. We believe these strengths position SiriusXM well for the future, and we remain committed to disciplined execution, thoughtful investment, and delivering sustainable long-term value for our shareholders. Regarding spectrum, we have a very unique position. We control 35 MHz of contiguous spectrum. We see a path to value creation as starting with incremental partnership-driven opportunities. Zach Coughlin, CFO. We delivered a solid start to the year with 3 key financial takeaways. Revenue up 1%, approximately 6% growth in adjusted EBITDA, and free cash flow more than tripling year-over-year. Our disciplined cost management and continued focus on efficiency drove approximately 6% growth in adjusted EBITDA to $666 million. We generated strong bottom-line performance, with net income improving 20% to $245 million, and earnings per diluted share growing 22% to 72 cents. Free cash flow was $171 million, more than tripling year-over-year, primarily driven by higher adjusted EBITDA and lower capital expenditures. We are reaffirming our 2026 outlook for relatively stable revenue and adjusted EBITDA, modestly lower self-pay net additions versus 2025, and continued growth in free cash flow to approximately $1.35 billion. Regarding capital allocation, our capital allocation framework remains consistent, prioritizing investing in the business, committed to a disciplined balance sheet, and from there, it's really focused on returning capital to shareholders. Additional important statements. The YouTube partnership was repeatedly emphasized as a significant opportunity to expand reach and advertising revenue. Scott Walker, Chief Advertising Revenue Officer, described it as unlocking a massive untapped opportunity. Spectrum monetization. Management acknowledged ongoing discussions with potential partners regarding spectrum monetization, viewing it as a strategic asset with long-term potential, prioritizing protection of core services while generating incremental value. 360L technology. This technology is seen as a key enabler for enhanced in-car advertising capabilities, with plans to activate targeted ad features. Companion subscriptions. This strategy is seen as successful in enhancing subscription value, improving retention, and supporting rate increases. Financial reporting. The company noted a non-cash depreciation charge related to the decommissioning of an FM6 satellite, which will reduce reported net income and EPS but not impact free cash flow. In summary, SiriusXM reported a solid first quarter of 2026, demonstrating progress against its strategic priorities, driven by resilient subscription performance and accelerating advertising growth, particularly highlighted by the significant YouTube partnership. The company reaffirms its full-year guidance and remains focused on disciplined execution and long-term value creation.